Hi, I'm Mary Twiss with OTC Markets Group. I'm joining you today from the Vancouver Resource Investment Conference, and I'm here with Amir Adnani with GoldMining Inc. Welcome, Amir.
Yeah, thanks for having me.
Definitely. So why don't we start by you telling us a bit about the company and talk about the evolution of how you adjusted to the markets today.
Well, we started out and looked at the opportunity presented by a prolonged bear market. To put it in perspective, we didn't think that this bear market in the gold sector would be this brutal, but in 2011 when we IPO'd and became a public company, things started to look a little rough, and towards the end of the year gold was getting a bit shaky, and in 2012 it really started to have a downturn. 2012 is when we made our first acquisition. And as the market continued to sort of stay in bear market territory for gold, we felt that it was the opportune time to make acquisitions, where you can make acquisitions for far less than the replacement value of the exploration, drilling, and work that's gone into a property. And this is definitely a consolidation approach where we're very much an acquisition company that's looking to acquire resource stage gold projects. So projects that have been drilled, developed to some extent, there's a good understanding of the mineral endowment and the resources that can be independently verified. We feel a lot of these projects that we acquire also have defined upside potential and drill targets or whatnot. But right now we're focused on these acquisitions. And one of the evolutions that's been interesting is the fact that, again, this bear market has lasted longer. And we've really welcomed that. We've welcomed that because as we've gained critical mass, and it's the snowball effect, snowball keeps getting bigger, better opportunities become available for acquisition. And so, I remain very optimistic because we've gotten to the point now where our company has amassed globally 9.5 million ounces of measured and indicated resources and about 10.7 million ounces of inferred resources. So in fact, we now control one of the largest diversified gold resource portfolios of any pre-production company.
Sure, so why don't you tell us about the outlook for gold right now and how the company is positioned to take advantage of those acquisitions?
I think definitely in terms of the industry outlook, one of the key themes that major gold producers are talking about is resource depletion, is the fact that industry resources and reserves are at a decade low. The more companies spend on exploration, the less they're finding. So it's sort of the idea that the low-hanging fruits in terms of deposits have been mined out, and now the sector has to do more exploration. Well, the last 5 years, again, during the bear market, companies have done record low exploration. So one trend and one challenge is, how do companies replace and replenish their pipelines of projects? That's why we're so excited about the portfolio of resource stage projects that we've acquired. Interesting data point that the average or unit discovery cost for a new gold resource is now about $45 an ounce on the ground. So again, it's costing more and more to find these. So I think really moving forward, the setup and the sector right now, overall for gold, the outlook looks very positive. Barron's just this weekend, as you and I are standing here at the conference, the commodities corner of Barron's is writing about how gold is having a stealth bull market. It's talking about the fact that the gold price is quietly moving higher. Inflation is rising, stock market is at excessively high levels, US dollar's weakening a bit. Overall, why would you not want to have a hedge in your portfolio? Insurance, which is what gold represents as the ultimate sort of currency, the ultimate hedge against any kind of volatility. So I think the outlook for gold looks very strong right now. And the main issue facing the sector really is resource depletion. And that's why we feel gold mining is very ideally positioned in 2018 and beyond.
Wonderful. Well, thanks for dropping by at this conference today, and we wish you all the best.
Thank you.